good. Just making sure everything's charging along nicely here. Audio's going, which is excellent. Hey, good morning. Good to see everyone, or well, when everyone jumps on anyway. Hopefully everyone's had a good weekend, and a bit of a shout out to all the mothers out there. Hopefully you've had a good weekend. A few people jumping on now. Hey, good morning, Alison. Good to see you. There's James. Morning, mate. Hopefully you're all good and well. Welcome to another little wealth coffee chat. Monday the 10th of May. While everyone's jumping on, doing the do. Little quick intros. Jason Witten's my name if you haven't met me before, but some of you have, like Michelle. Hey, Michelle. So welcome back, those who are coming back. For those who are saying hello for the first time, Penny. Good to see you again, Penny. For those who are here for the first time, welcome back, or welcome. Jason Witten's my name, as I said before. Been property investing over 20 years, coaching property investors 18 odd years across Australia and New Zealand. And each morning, Monday to Friday-ish, around about 8 o'clock, we have a wealth coffee chat about the world of property investing, about going the distance in this thing. Like I always say, it's a marathon, not a sprint. And, you know, property takes some time to get going. Hey, thanks, James. Glad you enjoyed it. For those who don't know, I do a little podcast called The Wealth Faculty. And you can catch it on iTunes or Spotify if you're up for it. I interviewed Sam, my business partner of now over 18 years, the other day. It was good to chat with him. Deep dive on what he's doing. Hello, my love. Good to see you. Well, there you go. There you go. Hey, Ben. Good to see you, mate. Thanks for the shout out. That's awesome. Hey, tonight, I was going to say tonight, feeling a bit off the pace after the weekend, but this morning I thought we'd talk about rents. And a lot of us, you should know anyway, you should know that the future of your passive income is the majority of us are expecting our rents to produce and create a passive income for us in the future. And what we need to understand is what forces might do that, what to expect, what not to expect, et cetera, and thought we'd sort of dive into that this morning and have a bit of a look about what's going on in the marketplace when it comes to our rents. Because a lot of people say, property prices will double every 7 to 10 years. I think that's rubbish. It's actually a big fat lie. It's a big fat bunch of bullshit. However, I have seen property prices fairly consistently double in value every 12 to 15 years. And it doesn't mean every property, but, for the time I've been hanging around and for the people of recent history that are a bit older than me, but in the game a bit longer, that's kind of been the cycle as we've rolled along. But some things accelerate that as we go. But I want to talk about some inverse and some positive and some negative influences in rents today and what we might be able to do about them. So let's jump over to, let's quickly do this. Let's just jump over to some things I prepared a little bit earlier. Let's see if I can move my noggin out of here so it's not in the way. There we go. Let's just do that. So, gang, interesting stats come out in the last little week. I'll do this so we can have a look at these independently, these little charts. One here about the quarterly change in the rents of just recent times. Now, when you look at these things in independence, you think, wow, okay, the capital cities aren't really, the big ones aren't really keeping up with some of the regionals. Like you have a look at this information here, you go, oh, wow. The regionals are doing way better from a rent growth point of view when it comes to our properties. And the big cities, their combined capitals, they're a bit off the pace. And, we talk about the idea of, we believe the big cities are going to be the better place for your property long term. But, sometimes there's data that shows temporarily that that's not the case. especially right now with the rent growth and so on. Now, I think that would be a bit skewed with the very close regional cities, regional towns to the cities, but, we'll see how this plays out long term. Bit of a shout out to Tim Boyle for a couple of these charts. Tim Boyle, good friend of mine. He's a mortgage broker, good mortgage broker at that, specializes with nurses and those in the medical field. And he's a mad keen stats and data guy, just like me. So a bit of a shout out to Tim Boyle. But, let's have a look at some info here about, all right, well, there's some data. There's some growth in our quarterly rents in the past little bit. How's that playing out? Look at Melbourne. Melbourne's struggling a little bit. Melbourne's had the worst lockdown or the worst affected rents in the lockdown. Matter of fact, Melbourne rents went backwards, went down in comparison to many of the other cities when the rents went up, by and large. And, what's going on? How do we manage this long-term into our future, okay? And when we have a bit of a look. But, when we have a bit of a look at other charts, other things that are going on here, we have a look at, the rental affordability index, and it plays an interesting tune. You have a look at Tasmania. Let's have a look here. You have a look at Tassie, and it shows that Tassie is super unaffordable. Now, super unaffordable over here. You have a look at the Hobart rents, and the Hobart's rents went up, right? Now, the challenge is you're kind of like, oh, what's going on there? The challenge is in Hobart, the rents are unaffordable, okay? Now, and this is kind of one of the reasons why I wouldn't buy in Hobart. I wouldn't buy in Tassie per se in bulk. Maybe I'd do one property there, but not a whole portfolio there, because by and large, it's unaffordable for the people who live there for the rents to continue to go up. Everyone hearing me? Everyone listening? Right? Because Tasmania, and we'll talk about this in a minute, we'll talk about, what drives rents, and we'll talk about that in a second. So you can have a look at other little places like this. We're looking about South Australia, in the relative moderately unaffordable. And you're looking at the other places in India. You're looking at, New South Wales is moderately unaffordable. Victoria is completely affordable. Queensland's completely affordable. Western Australia is completely affordable. ACT just starting to sort of get, stuck in the unaffordable space. Oh, you guys can't see that. Sorry. There we go. When we're talking about, moderately unaffordable. And V's talking about, hey, VV, however you say that, the Byron Bay effect. Absolutely. And what happens is, if you get 1,000 people move into a small town, then, there's not a small town can't build 1,000 properties in a year. It's flat out been building 100 properties in a year. And that's where this misleading data comes from. And so when you have a bit of a look at the data, for me, I wouldn't be rushing into places like Hobart, because the future is going to be restrained because it is unaffordable, severely unaffordable right now. And for development and lending and buying, it's unaffordable because of wages down there, okay? So we look at a bit of data and we go, oh, that's interesting. Let's dig a bit deeper. But let's do a little analysis on really what I was sort of going to talk about this morning, is the concept, what I call the proximity for profit. Okay, the proximity of your properties. I'm going to put that over there. The proximity of profit. Now, let's just use the CBD, and you can use anything else you like. You can use a train station. You can use the ocean. You can use something that people want to live next to as proximity. And the further away from the thing that people want to live next to, the less the rents. So I know that if you were, let's say, for example, just up the road here in Brisbane, if you were 1K from the CBD in a house, you could charge $1,000 a week rent. okay, 1 kilometre. But if you are 30 kilometres away, from the CBD, then you're charging $400 a week rent, okay? Now, obviously, the prices correlate to those distances as well. You know, you're probably spending, $1 million for a house, and you're probably spending, maybe $500,000 for a house there. But what I'm saying is the proximity of some infrastructure, the transport, the schools, the jobs, et cetera, are super important to understand when it comes to your property portfolio. And remember the other day we talked about this one. We talked about the 3 or the 4 drivers of the 4 qualities of your rental income into the future. That is the quality of the location of the property. That's the hardest one to change when you have a property. The quality of your property itself, flight to quality, the design, the architecture, the feel, the maintenance, et cetera, and the quality of the tenant, okay? You're at the center of this. You're looking for dollars. That is how rents go up, okay? And the person looking after this holy trinity, or whatever you want to call it, is your property manager. The quality of your property manager, coupled with the proximity to profit, the proximity for pressure for your rents into the future, will help those rents go up, and the ability for people to afford this stuff, which is super important. So let's just have a quick look at this. It's a deep topic, and there's a lot more to it. We've dived into it a bit, but think about this, gang. What's going to make your rents go up into the future? What happens? Inflation plus wage rises make our rents go up. Okay, that's what happens. Inflation plus wage rises makes our rents go up. Now, for the moment, in the short term, that's been a little bit of a struggle because we've had COVID. We've had probably the last 5 years stagnation of wages, okay? But I think that's going to change. We can see that coming, inflation and wage rises. The challenge has been a couple of things make rents go down or stagnate. Interest rates staying flat or going down, okay? So when interest rates are low, the landlords don't have as much pressure to put the rents up. And number 2, supply and demand, okay? When there's an oversupply, there's been quite a lot of supply, and we just talked about this probably prior to 2017, 2018, there was a lot of supply in the market. Now, 2019, 2021, the supply is down and gone, okay? So I believe the rents are going to go up, and we're going to get a huge population maneuver when it comes to these things as well. The wage rises, the inflation, and then we're going to get some new population. That's going to give us some pressures in certain areas, like the Byron Bay effect. When 1,000 people arrive in a small town, the rents go up. Anyway, hopefully that made sense. It was a lot more complicated this morning than a quick coffee chat, actually. But hopefully, you guys get the picture. Don't dive into the data and go, we should run off to the regionals, because that's not the case. And then you look at, Hobart's killing it. We should go to Hobart. Well, Hobart's unaffordable, gang. Completely unaffordable. Perth is one of the most affordable rental places in Australia, if you look at the little rental thing there, okay? And Victoria has just become the second most affordable rental place in Australia. Then Queensland has come in number 3, and then New South Wales is number 4. So you got the 4, these 4 over here, New South Wales, Victoria, Queensland, Western Australia, they're the 4 affordable places for rent, gang, okay? And they're the places, listen to me now, they're the places that rent will grow in the next 10 years, because those places are going to get the jobs, they're going to get the population, they're going to get the people when it comes to this little game that we're playing, which is property investing. Anyway, hopefully that made sense. Yeah? Okay. As we go. Yeah, I think the population will be affected pretty insanely, Michelle, when the borders open up again. Alison's asking, do we know any good websites that have CBD maps and overlays set for distance transport lines? Good question. The walk score, walkscore.com. Check that one out. Alison, microburbs, and there was a little website that I was just using a moment ago, which has got some good stats, et cetera, et cetera. It was called, and I'll track it down for you, Alison, and I'll drop it in. But there you go, gang. Hopefully you're all well. I think we've done the do this morning. Where are we? Here we go. 16 odd minutes now, so maybe a bit of a longer coffee chat this morning, but hopefully that made sense when we're talking about, rents. What are they doing? Where they're going to go into the future? Let's think about where we own our properties and how we own them and what we do about it. There you go. All right, gang. Well, thanks for those that are always here. Great to have your support, gang. And for anyone joining who are new, welcome along. Thank you for joining us. Also, each day, Monday to Friday, we just have a bit of an informal chat about what's on my mind or questions you guys might have. So chuck them in the chat. If you've got something you want me to talk about, let me know. Like I said before, been investing 20 odd years, helping property investors across Australia and New Zealand build their property portfolios. So along the way, we've paid of attention. We've done a few deals, over 6,500 deals, property deals across Australia and New Zealand and counting. So we've learned a few things, and we like to share those with you guys. And if you want to know more, track us down on our podcast. This has turned into a podcast if you're watching live on Spotify and iTunes. And we do some education stuff every week for our investors. So track us down on our website or on our Facebook page, find out more. All right, gang, that's it. I'm done. Hopefully you're awesome and well. 8:20, time to get after it. And have a great rest of your day. And I'll see you guys tomorrow. Thank you. Bye-bye.